Refused, that single word, stamped on a CASP license application by an EU national regulator, can end a crypto business that took years and tens of millions of euros to build. Under MiCA Title V, national competent authorities across the EU are conducting the most rigorous examination of crypto businesses in European regulatory history. And the bar they are applying is being set by ESMA's supervisory briefing, a document that tells NCAs exactly what to look for, what questions to ask, and when to say no. Here is what most firms do not realize until it is too late. Getting a MiCA CASP authorization is not like the old VASP registration. You cannot just fill in a form and wait for approval. The NCA is conducting a deep examination of your entire business, and the AML weaknesses that you tolerated for years are now the exact things that will get your application refused. If you are building or running a CASP right now, the transitional window closes on 1st July 2026. After that date, operating without a MiCA license is illegal. For firms with genuine AML weaknesses, the worst-case scenario is not a slow approval. It is a refusal that makes them unlicensed the day the window shuts. MiCA Articles 59 to 63 set out the authorization regime for CASPs. Article 59 says that no one may provide crypto asset services in the EU without prior authorization as a CASP, unless they are an already authorized credit institution or investment firm using the Article 60 exemption. Article 62 sets out what the application must contain: the business plan, governance arrangements, management body composition, shareholder structure, and crucially, the AML and risk management policy. Fit and proper assessments apply to every member of the management body of the CASP, the board, the executive team, and the key function holders, including the MLRO. Fit means the person has the knowledge, skills, and experience for their role. Proper means they are of good repute, no relevant criminal convictions, regulatory sanctions, or serious financial misconduct in their past. The NCA will check both dimensions for every named individual in the application. For those of you who have been through a MiCA authorization process or are in the middle of one right now, what has been the most challenging part of the application? Governance documentation, the AML policy review, fit and proper for the management team? Drop it in the comments because the answer from practitioners is usually very different from what the regulation says on paper. ESMA's supervisory briefing on CASP authorization is the practical guide NCAs use when assessing your application. It tells supervisors to examine 6 core areas: program of operations and business plan, governance and management body, internal controls, risk management, shareholder and ownership structure, and AML and CFT arrangements. For each area, the briefing specifies what documentation must be provided and what minimum standards apply. Let me take you through a simulated CASP authorization from the perspective of a firm with legacy weaknesses. Call it ExchangeCo. ExchangeCo was registered as a VASP under National AMLD implementation, has been operating since 2019, processes around 200 million euros in monthly trading volume, and has 180,000 registered customers. It has a compliance team of 3 people, KYC, that relies heavily on manual review, no independent compliance function, and transaction monitoring that generates alerts, but has a backlog of several thousand unreviewed cases. ExchangeCo's NCA starts with governance. The management body consists of 2 co-founders who are also the CEO and COO. There is no independent non-executive director. The compliance officer reports to the CEO, who is also responsible for commercial decisions. ESMA's supervisory briefing explicitly states that the compliance function must be independent from commercial activities and must have a direct reporting line to the management body, not through the CEO. ExchangeCo's structure fails this test. The MLRO in the application is the existing compliance officer, someone with 2 years of experience at a fintech startup and no prior CASP or financial crime specialist background. The NCA applies the fit and proper test. Fit requires knowledge and experience appropriate for the MLRO role at a CASP of this size. 2 years at a small fintech is not sufficient for a firm processing 200 million euros monthly. The NCA flags this as a material gap requiring either an experienced hire or a commitment to remediation with a binding timeline. ExchangeCo's AML policy is a 15-page generic document that covers customer due diligence, enhanced due diligence triggers, and suspicious transaction reporting, but the NCA examines it against the EBA's guidelines on MLTF risk factors for CASPs. The policy does not address crypto-specific risk factors, no analysis of blockchain analytics integration, no policy on self-hosted wallet interactions, no high-risk geography matrix, and no mention of the travel rule procedures under the TFR. These are not nice-to-haves. They are mandatory elements. The NCA's deepest concern is Exchange Co's transaction monitoring. A backlog of several thousand unreviewed alerts represents a fundamental failure of the STR, Suspicious Transaction Report, obligation under AMLR. The AMLR requires obliged entities to examine transactions and report without delay where there are grounds to suspect money laundering or terrorist financing. A monitoring system that generates alerts that are never reviewed is legally equivalent to having no monitoring at all. This alone is grounds for a conditional approval or outright refusal. NCAs have the option of granting conditional approval. This means you are authorized to operate, but you must meet specific remediation conditions within a defined timeframe. For Exchange Co., the conditions might include appointing an independent non-executive director within 60 days, hiring an experienced MLRO within 90 days, clearing the alert backlog and submitting a remediation report within 120 days, and delivering a revised AML policy covering crypto-specific risk factors within 45 days. Missing any condition triggers a show cause process that can lead to license withdrawal. What does a strong CASP governance structure look like? First, a management body with genuine independent non-executive members who have relevant financial services or risk experience. Second, a compliance function that reports independently to the board, not through the CEO. Third, a dedicated audit committee. Fourth, a documented risk appetite statement that explicitly addresses crypto-specific risks, AML, market integrity, custody, operational. Fifth, a clear 3 lines of defense model with the second line genuinely independent from the first. The MLRO profile that NCAs are looking for combines financial crime experience, crypto sector knowledge, and management capability at scale. Specifically, ideally 3 or more years in AML roles at a financial institution or regulated firm, familiarity with blockchain analytics tools and crypto-specific typologies, experience handling STR processes and FIU relationships, and the authority, including budget authority, to challenge the business. The MLRO is not a box on an org chart. Under MiCA, they are a critical gatekeeper whose weakness can sink your license. I want to hear from MLROs and compliance heads who have been through this. What was the specific AML gap that the NCA flagged hardest in your CASP application review? Was it transaction monitoring, blockchain analytics, travel rule procedures, or something in the governance structure? Drop your experience in the comments. Your insight helps the next person prepare. A MiCA-compliant AML policy for a CASP needs to address at minimum customer risk scoring, incorporating blockchain analytics outputs, enhanced due diligence for high-risk customers, including PEPs, high-risk geographies, and customers with self-hosted wallet patterns, product risk assessment for each service type offered, delivery channel risk for non-face-to-face onboarding, travel rule compliance procedures including what happens when originator information is missing, and STR procedures with documented escalation timelines. This is not a single document, it is a policy framework. I have put together a complete CASP authorization readiness checklist, governance, AML policy framework, MLRO profile requirements, and NCA submission documentation, all at davinsadiligence.com. If you're building your MiCA application right now, this is a practical starting point. The full audio episode is also on the DaVinci Diligence Spotify podcast. If an NCA refuses a CASP application, the firm has a right to appeal under administrative law procedures of the member state. But here's the practical reality. An appeal takes time, typically 6 to 18 months, during which the firm cannot legally operate under MiCA. If the refusal comes close to the July 2026 transitional deadline, the firm may be forced to wind down EU operations while the appeal runs. Refusal is not a speed bump, it is potentially existential. The core lesson of the CASP authorization episode is this: MiCA authorization is an examination, not an application. The NCA is testing whether your governance is genuinely independent, whether your AML framework is genuinely crypto-specific, whether your key people are genuinely qualified, and whether your controls actually work. Firms that treat the application as a documentation exercise, writing policies that describe a compliance function that does not really exist, will fail. Firms that build the substance first and document it second will pass. Subscribe to keep following this series. Episode 4 is where we go inside the governance and internal controls requirements, the 3 lines of defense model applied to a CASP, what independent compliance actually looks like in practice, and the specific conflict of interest rules under MiCA. That episode is essential if you are building the internal architecture of a CASP. See you there.